Welcome back. Joining me as we wrap up the day's markets action is Robert Towell from Sasfin Wealth. Robert, thanks so much for joining us today. So
Pleasure.
I read a very funny note just before markets closed from Anchor Capital today. It was written by the co-chief investment officer, Nolan Vapanar. He wrote, "Today reminds me of a classic 2009 comedy, The Hangover. After a legendary night out, a bunch of guys wake up in a wrecked Las Vegas hotel with Mike Tyson's tiger in the bathroom, a random baby on the bedroom floor, missing a couple of friends and a few teeth. No one is quite sure what happened yesterday, but they can all agree that it was rather stupid. It sounds a lot like financial markets on Monday. No one knows what happened, but it probably was rather stupid." Rob, it really was a crazy day for markets yesterday. Would you say the sell-off we saw was warranted?
I think the markets have been relatively high, and there's been a lot of geopolitical risk in the market, a lot of economic risk as well. So I think markets were expected to come off. I think some of the moves were a little bit exaggerated. Japan coming down 12% in one day was a massive move. And, I don't think markets expect that unless there's some type of catastrophe, which, looking at all of the news in the markets, we couldn't see a catastrophe that no one knew about before. There was no new news in the system. So I think 12% was an overreaction. And you saw again that, today the Japanese market came back nearly 10%. So I do think it was a slight overreaction, but there is very high levels of risk, geopolitical risk in the world, and markets are edgy.
Sticking with Japan, would you say the downturn that we did see yesterday was solely off of the back of, those U.S. recession risks, or were there more domestic issues affecting that market?
It's difficult to tell. I think with the U.S. rates definitely coming down because of their economic data, the carry trade loses some of its margin, and that's where people put money overseas and they borrow at very low rates in Japan. And at the same time, Japanese rates are starting to move up. So I think people are bringing back that money, that Japanese money that's been invested offshore, back into Japan. That's causing the yen to really accelerate in value. And therefore, all of the exporting that they're doing, the exporting of Toyotas, Hondas, etc., is all under pressure because obviously they're not as competitive anymore. So I think it's a little bit of that as well. And then they've got one or two issues in Japan, but generally the economy is firm. So it's more the recovery of the carry trade. And there's so much money in bond markets and people that have been looking for yield. When these type of trades unwind, it's such huge volumes, and you could see it come through in the market in Japan and yesterday on Monday.
Now let's get into some company news. We had a number of companies update markets today on the local front. AngloGold benefiting from higher gold prices and increased production. Is this one you look at, Rob, considering that they don't have assets in SA anymore?
Yes, it is something that we look at. We've got it in our domestic equity portfolio. So we do hold AngloGold. They had quite a lot of restructuring last year. They listed overseas. They listed in the US. And they had a lot of costs in their last set of numbers. Their last set of numbers didn't show any really of the benefit of the higher gold price. So we were expecting slightly better numbers, but they delivered really good set of numbers now. And you can see that it really picked up the mining and precious metals index on our exchange. It lifted up Harmony, and it lifted up Goldfields as well. And, with gold above $2,300, these gold mines are starting to make money, and you could see it from the increase in their dividend, which they increased, extensively. And I think that in the next few months, you're going to start to see earnings coming from the gold miners and really benefiting from this higher gold price. So, we like AngloGold. It was a good set of numbers, and we think it will continue for at least another 6 months and into next year.
Let's get into Afrimat now, also updating the market. Its first half, basically a tale of two quarters, Rob. In the first quarter, issues at AMSA's facilities and subdued volumes weighed on its performance, while volumes picked up in the second quarter. The share price was down 2% today. Investors not really pleased with that update.
I think they're a very well-run company, and they've had a really good run, especially with their iron ore and a strong iron ore price last year. But iron ore has been coming down quite aggressively this year. We got down to the low 100s, and it has dipped under 100 for a period of time. And then secondly, the exports from Transnet, they're having problems on the rail side. So they had two whammies. They had an iron ore price that was coming down, and they had they couldn't get the iron ore out through the ports and through the rail. So that was a problem for them. And then ArcelorMittal, which they sell a lot of raw material to, but a very weak first half of the year, and definitely the first quarter of the year. So there you could see the volumes coming down in Afrimat. And, we really do need some industrial spend in South Africa and infrastructure spend to come through so that Arcelor starts to buy these assets, starts to buy all the iron ore needed to make steel. The steel market overseas as well is also very well supplied. So at the moment, Afrimat's in a difficult situation, but they're also starting to see the economy pick up slightly. And also in the Nedbank numbers, which I think we're going to talk about, you see that movement after the elections. There has been an improvement. Now, April and May were really 2 dead months for South Africa. Really little investment went through waiting for those elections to come through.
And that brings me to my next question. I was about to ask you about Nedbank, with Jason Quinn saying he is cautiously optimistic about South Africa's prospects, considering that we have the national election behind us. I know Nedbank is not necessarily your stock pick, but you are sticking within that field. Just tell us about your stock pick.
Yeah, so I think SA banks are in a relatively good position. You're starting to see interest rates come down, which will put a little bit of release some pressure from the consumer on the mortgage loans, people paying off cars, etc. So I think they're going to get relief in the year, maybe 0.5% by the end of the year. So I think that's going to benefit their loan book and their bad debt book. At the same time, it's not going to be a big enough cut in rates, so they'll still be earning really good interest income. And I think they're very well capitalized, all the South African banks. And people, I think, are slightly underestimating, a good outcome of the elections and what it can mean, for finance for the banks, especially into renewable energy and to infrastructure projects. So I think that even though they've had a good run since the GNU, I think there's still more upside there. And you see in Nedbank's numbers, they did a dividend of 10 Rand in March, another dividend of 9 Rand. That's nearly 20 Rand of dividends. So you're getting paid to hold them at this stage, getting a really good dividend while they still could grow, at 15%. So I think that the banking sector in South Africa still has more upside.
Rob, thanks so much for joining us and just taking us through
much.
the day's markets action. That was Robert Towell from Sasfin Wealth.